Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. How's it going today? Today's Stock Market Live, we have a lot to talk about. The big question today is, are we seeing an early reversal of the last 7 weeks of selling, or are we going to finish up with 8 weeks in a row to the downside with the bear market right on the precipice and starting to roll over? So today the question is, bear market move to the downside versus today's bullish momentum to the upside. Here's the question. Is it time to get short on this rally? A lot of electric vehicle stocks rallying this morning as well. Or is this the time to start nibbling on some longs here simply because the market would be down 8 weeks in a row and it's gone down too far? Now, hopefully, you know that gone down too far, it can keep going down. So you got to really be building this out in a way that is smart. Something else we're going to talk about right now, which I want to show you really quickly, is our coaching call from last night. You can see last night's coaching call was 2 hours and 20 minutes. So what I want to do is I want to walk you through some of the questions, but we're actually going to scroll all the way down to the bottom. And we're going to start out here. Should you start buying shares in good companies as the market trades lower? That's the big question that we're going to ask, and we're going to answer it. Actually, we're going to cover a bunch of those questions because every Friday we give you an idea of here's what we discussed last night. Here's what's coming up for the market today. We also have a bunch of stocks. And I want to point out something as well that I mentioned to our community last night at about 8 o'clock last night. And we get a ton of questions about how do I have confidence? How do I have conviction? And I got to be honest with you, conviction and confidence comes from doing the work. There's no other way to put it. And I'm going to talk about doing that work today, but it's something I pointed out last night and how the market's actually unfolding this morning. They work together when you do the extra work. So we have a lot of stuff to talk about today. Stick around. I'll be back in just 1 second. Okay, so thank you so much, everybody, for joining me. A little disjointed here today, a little computer problems. So anyway, what we want to talk about is the market and the rally that we're seeing in the market right now, specifically the reasons they're giving for the market rallying. Okay, use stock futures, jump on China rate cut. However, and this is the big thing that I want to point out, when you're doing your game planning, when you're doing your researching, when you're doing your scanning, which we're going to talk about how to do that in a second, you start to notice these kind of things. And this is actually from last night. So this is what I want to point out here. Actually, it's 7:43 last night, seeing quite a few stocks that match bullish scans. So I pointed that out to our community last night. So this is where you get the conviction to be buying and selling in a way where you hold your good trades longer. You're either in cash because it doesn't make sense, or you sit up in your seat and you're like, wow, that's interesting. I didn't realize that. But the only way that you can do that is to actually do the game planning the night before. So what we teach, what I show everybody to do is you do your scans, you do your research the night before, then the next day you review everything. But there's certain things that you notice in the scans, and I'm going to point that out as well, where we had a lot of stocks yesterday while they're still in longer term bearish order flow, but yesterday they broke out on bullish energy candlesticks and bullish momentum. So I want to show you what that looks like, because you start to say, wow, that's different. That's not what was supposed to happen. What do I do about that? So when we scale back a little bit, and you want to take a screenshot of this, it's a Friday bonus. We do this every Friday. So if you get into the game plan of ideas that we had for last night, we're specifically going to talk about some of these ideas here on the other list of stocks. I'm going to hop on over to Lucid and show you exactly what I mean. Here's where the futures are right now, up 40. We're actually going to go over to the daily charts, and we're going to pull up, excuse me, a little voice is going from talking this week. This is what we're talking about, right? So not a big deal, right? If you take a look at this chart, and especially if you're a regular viewer of the channel, you know that we're very big on follow the order flow and read the tape, right? Right now, the order flow is to the downside. The most recent price action, a little bit of a rally. So a rally in a bear market is technically still a sell short. However, when we look at this chart, this is the difference between being a chart reader and being a tape reader. This is where it's really important. And this is what made me sit up yesterday and say, wow, that's interesting. So you could just see the price action. You can see how we've been working the chart to the downside. And yesterday's rally, right, that's okay, something to notice, right? And you're thinking this bigger picture to the downside, it's still a sell short. But This is what got me to sit up in my seat last night. Look at that. Let me zoom this out a little bit. So language, right? The language, the lingo of trading is very important. We talk about order flow. We talk about reading the tape. We talk about the tape changing. How do you know when there's a potential change of momentum? How do you know when there's a potential change of order flow? Pauses. That's the big thing. A push and a pause. You hear us talk about that all the time. A push to the upside and then a pause. That pause is what's known as a bull flag. Best case scenario, during that pause, volume decreases, which means that nothing changed. So the volume to the upside is what we're looking at. And then a light volume pause implies that we're going to continue. So again, just keep it as simple as possible. You're looking for a push and a pause. When it pauses, if the pause is on light volume, you're actually in good shape to assume that's going to continue. All right. Now, here's the interesting thing. In this bigger picture to push to the downside, let's actually go back to the chart. In this bigger push to the downside, Lucid actually rallied on heavier volume. And you can see that over here, right? Look at how heavy that volume is. And then paused for 3 days on light volume and then rallied again yesterday on heavier volume. So these are the clues to tape reading that you absolutely need to pay attention to. So I want to get super clear because we do a lot of these kind of trainings on Friday. And by the way, if you're new to the channel, please do me a favor, click and subscribe if you get some value out of these videos. Training on Friday, and especially taking a look at what we talked about on last night's bootcamp coaching call, so I can inspire you to level up your trading over the weekend. Hopefully you have a little bit of spare time and you can get in there and think about it. So what that led me to see last night is now, okay, Lucid is starting to rally a little bit after going down, pushed up on heavy volume, paused on light volume, pushed up again on heavy volume. So step back and be like, oh, wow, that's different. I might consider momentum trades as buying opportunities in those stocks today if they meet certain criteria. Then I need to go over to the other list of stocks in that same group and take a look and see our other electric vehicle stocks rallying with the volume that we just read on the tape in Lucid. So now we head on over to the charts. Obviously, the big dog we're going to take a look at is Tesla. And does Tesla have the similar type of price action? Tesla's up $13, but let's be realistic here. Tesla has a lot of other garbage going on right now with Elon Musk now, with some more negative news coming out about him today. He's got the Twitter situation going on, whatever label you want to put on it. So Tesla might not be the greatest example, but it is still up $13 this morning. But I want to specifically go over to the Chinese electric vehicle stocks. We've been watching them and we follow them quite a bit. And you can see NIO is up 7% this morning. And again, a push and a pause, and the pause on lighter volume. That's exactly what you want to see. Then we see XPEV, very similar. A push and a pause, not as clear. So if I'm trading either one of the two, I'd probably be leaning a little bit more towards NIO. Now, I want to be super clear about this. I'm not talking about a longer term, everything's starting to go up. That's not what I'm talking about. What we are talking about is starting to put the pieces together for a potential short-term reversal. That's what we're talking about, okay? If this day trading opportunity unfolds, that means that we need to read the tape after the market opens and see if today's price action validates what we're looking at over the last week. This is what separates somebody who sees their trading account grow consistently, whether you're day trading or swing trading, from somebody who's getting beat up right now because you don't have structure to determine that the market is now going down. And how do you handle that? Is it going up or down for a week? Okay, great. What does that mean? Is it going up and down for an hour? What does that mean? When you start to have these kinds of conversations with yourself, and yes, to be a trader, you have to have these conversations. You have to talk to yourself a lot during the day. You start to put these pieces together. You are then never surprised. That's the big thing, which now I want to take this over again into last night's coaching call. And I want to walk you through some of the questions that we had. We're going to cover this one right here in just a minute. But what I want to cover is we had a question last night about here, okay, right here. How and why it's critical to monitor multiple time frames and recognizing when the tape changes, okay? I can't stress this strongly enough. the question came up from somebody who's brand new into our boot camp last night, and this person happens to be a swing trader, which probably a lot of the people that come into our boot camp, which by the way, it starts every 2 weeks. If you want to learn about the boot camp, just click the link in the description. They are only swing trading. So the thought process behind the question, I want you to get a chance to snapshot this question, which is right here. How and why is it critical? So essentially the question came in is, if I'm only swing trading, why would I bother watching other time frames? So in other words, I just know I'm swing trading. I just know I want to be a buyer. Why would I look at anything else? Because I know I want to be a buyer. Well, let me ask you a question. How many people, and you don't have to raise your hand, but how many people got caught at January of 2022? The market started to go down, has not recovered, and you did not have in place a method, a system, a process to say, okay, we're still good. Okay, we're still good. Or, uh-oh, something changed. Uh-oh, something changed. And now I need to do something about it. Raise your hand. Again, you don't have to type it in, but raise your hand if you got caught and now you're sitting on big positions that are getting crushed simply because you couldn't read the tape. So again, I'm going to tell you the way I teach it all the time. It's very similar to driving. You can't get on the road and say, I'm just going to hold my steering wheel straight. It doesn't work that way. You can't get on the road and just say, I'm going to do 65. It doesn't work that way. Trading, and again, we talk about the language of tape reading. Tape reading is building the argument for whether or not the idea that you have is still valid. So again, talking about some of the questions that we had last night, okay, getting into how do you know, and again, want to get down a little bit here. Right here. How to understand the market is choppy in real time and how to have the confidence and patience in your plan to let winning trades run. Okay. So what does that mean, right? How to have the confidence in your trading plan, how to recognize when the market's choppy, and how to recognize situations where you should be sizing up, or if you're not getting bigger, when you should hold those winning trades longer. And it comes down to what I showed you at the beginning of today's call. The call that I made last night where I said I'm seeing all these bearish moves to the downside, but because I do that 90 minutes of game planning for everybody, which by the way, it's done for you. I'm giving you all this information every night, both in text, in our document, in our spreadsheet document, as well as in a video. You can't notice these things unless you're doing the extra work. So I'm going to call you out on it again right now. You hired yourself. If you're watching this now, I applaud you. 7:43 in the morning. Maybe you're watching the video a little bit later. I really appreciate that. But you hired yourself as a money manager. How much time and effort are you putting in to finding good ideas? Now, probably the number one reason that people don't put in a lot of time is because they don't know what they're looking for. They don't have a process. Our process, obviously, is order flow and tape reading. So I want to go back to what we were talking about before about should I monitor multiple times? If I monitor multiple times, how do I understand what I'm looking at? This is what we're talking about with tape reading. What do I need to see, and how do I know if it changed? That's the problem that a lot of people had coming into this year. So if we go over and just take a look at the market and zoom this out a little bit here, and right here is the change. How do you understand it changed? Well, at the very least, you have to determine which trend are you trading. And that's the big question that we get all the time. Am I day trading? Am I swing trading? What time frames am I supposed to look at with those two different styles? If you are swing trading, stop watching 5-minute charts. I can't say it any other way. If you're swing trading and looking to hold on to the stock for a month, stop watching a 5-minute chart. If you're day trading, then you're looking at the higher time frames for the idea, but then you go down to the shorter time frames and you validate if the price action right now is doing what I saw on the big picture. That's a part of the video you want to watch again. This is where trading confidence comes from. This is where trading conviction comes from, because you have the right map. You know what time frame you plan to hold the trade, and then that's going to dictate which charts you should watch. That's going to dictate which order flow you should watch, and that's going to dictate if you know the tape has changed. So if we go back over to the charts and we're looking at this picture here and seeing this big, beautiful move to the upside, how do we know when it changed? How do we know? Generally speaking, we start with the weekly time frames. The weekly time frames start to tell us, is it looking like this or is it looking like this? So at the very least, and again, I want to go back to this question over here, okay? How do you see the market is choppy in real time so you can save money? This starts out with the number one question. What am I looking for? You need to understand what perfect looks like so that the more perfect you have in front of you, your conviction level will go up as long as you're near the optimal entry and you have room to go, as long as you have sufficient profit potential. But if you don't know what perfect looks like, that means you don't have an edge. If you know what perfect looks like, then you will also know it changed or if it didn't. If it did not change, because you know what perfect looks like, you're good. You just sit back, you have your coffee, and you manage your trailing stop loss. If you know what perfect looks like and it changed, then you need to sit up in your seat and say, I might need to make a decision here. That last part is where a lot of people are getting hurt in 2022 because number one, you didn't know what perfect looked like. And if you did, you didn't have a plan in place to say, if it changes, what do I do then? That's the key. So we're going to go right back to that same chart and take a look at exactly what we're looking at. If this is what perfect looks like, that's clearly not perfect. Okay. But that's not enough. Okay. So there were a lot of times where the market pushed up and paused and then took off again, right? But why this time was it different? Why this time did it not go up anymore? And how could you have recognized when it was time to maybe move up a trailing stop, maybe tighten up some of your risk, maybe reduce your risk profile? If you have 1,000 shares and say, if this happens, maybe I'm going to take 500 of them off the table, just using random numbers, right? Well, number one, you have to read the headlines. You know, we talk about the headlines all the time, and you have to start to pay attention to the headlines in a way that you're reading them to make money. You're not just reading them for the sake of reading them. So again, anytime you read headlines, say, how does this affect the stock? You put out your best analysis, and then you look to see if you get validation. But what changed this time coming into the year? Quantitative easing was in the news every single day. So that whole reason that the market pushed to the upside for almost 2 years was gone. Gone. Also, big conversations from the Fed. We are definitely raising interest rates. We're definitely raising interest rates. Two big reasons that the market was off to the races vanished. Now, I'm not saying you need to be an economist. I'm not saying you need to dig deeper into this, but it's as simple as a Google search and say, why is the stock market going up every single day? Last year, we had 52 or 54 new all-time highs in 2021. The reason for those all-time highs vanished. But let's say you didn't know all of that. Let's say you didn't know any of that, and you just want to look at the charts and take a look at some ideas. Well, you need to have some form of tape reading to tell you that if price action changed, what does that look like? So we can draw trend lines here all day long. And let's just say we go from here to here. And you could make the argument that, well, it paused there and kept going, paused here and kept going, paused here and kept going. And that's correct. But here's what's different, okay? During this pause, it took off again. 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 During this pause, it took off again, okay? During this pause, it did not. Now, here's the biggest thing that I want to get across. I can hear you in your mind saying it's not that easy. I'm telling you, it is that easy. You are probably making the way you look at the stock market too complicated. I already walked you through how last night I called what was going on in the market this morning simply because of a process. Now, here's the thing. Let's say you believe in the big picture of the market. The market always goes up. Over the long run, it always goes up. That's true, right? If you're going back to 1929 and you're looking at everything and how it's going forward. But let me ask you a different question. Let's say, for argument's sake, that I'll just use John. John's one of our let me say this in the right way. John's one of our best contributors into the into our community. I want John to know I appreciate that. Let's say that John is retiring next year. Okay, let's say John's and all of his money's in his 401k. And again, this is not financial advice. This is trading insights. Okay. Yes, you might be right that over the long run, stocks are going up. But what if you need that money 18 months from now and we're in a bear market and the potential for the market to crash? How do you know whether or not you need to take action? Well, I just walked you through the process of pushes and pauses that kept following through. But at what point, and again, this works on a 5-minute chart and it works on weekly charts like we're looking at right now. At what point after this pause that breaks, at what point do you say the tape has changed? Here. We break here, rally again, push down, and rally again. This price is where the market turned. Not necessarily here, because it would have been easy to say, okay, that pulled back and we took off again, which we pretty much did. But then we sold off, FOMC rally, and we couldn't get through that level again. What you need to start asking yourself is, if you're a day trader or if you're a swing trader, which order flow matters to me? So it could be monthly charts, you're holding the trades a little bit longer. It could be weekly charts, you're looking to get in and out from Monday through Friday, or 5-day trades, whatever that happens to be. If you're a day trader, you're still looking at those higher time frames, but then you're validating on the shorter time frames that right now it's doing the same thing on the big picture. And this is a big problem that a lot of traders have. You go into the day saying, I want to be a buyer, and that's great. You could build a great argument for wanting to be a buyer, but right now it's going down. Raise your hand if you went into the day saying, I love this stock, I want to be a buyer, and it's going down, going down, going down, going down, and you continue to buy it. That means that you don't have a process in place for after the market opens to say, okay, I want to be a buyer, but is right now validating what I saw on my homework, my research, my game planning. That last step is where you're going to save a small fortune by either being active when it's good or stepping aside when it's not validating. Okay. Let's see. Pat saying the economy is crashing, stocks will continue too. So Pat, I want to bring that up because that was the question that we actually had last night. And I want to bring that up over here. Should you start buying shares in good companies as the stock market trades lower? I'd be very interested to see, what is everybody on this call or whoever's watching the replay, what do you think about that question? Should you start buying companies like Home Depot or Apple or whatever companies you believe right now as the stock market is going down? Right now, May 20th, 2022 is right now a good time to start buying good companies. Here's where it gets advanced. Here's where we level up, okay? You need to know, are you bottom fishing or are you seeing signs of a bottom based on price action and volume? Also, big difference here. Are you going in and getting your full share size as it's going down, believing you got a bottom? Or are you going in and let's just say 1,000 shares because it's easy to recognize. This is the difference between averaging down into a bad position versus what professional traders do, which is they build positions. So again, we talk about stacking the order flow. We talk about reading the tape, right? Institutions, the smart money, don't go in and say, I'm getting 5 million shares today, baby. Let's go. It's going up as soon as I do it. That's not reality. It doesn't work that way. As things are going down, they slowly start to buy. As things go sideways, they continue to build into that position. And then as it breaks out to the upside, assuming it reverses and heads back up to the upside, then they start to work that trade as we have what we call the markup as it's starting to go higher. So if the smart money builds positions that way as it's going down and hopefully goes sideways, if we are looking to build into a position, then we would need to do it in pieces. But I want to be clear about this. I do not believe that the bear market is over. You need to be aware that a lot of people are calling for a lot more pain to the downside right now. multiple places calling for it. Now, if you go back to what we said on Monday, we were calling for a rally on Monday. Go back to watch the videos. You can see a link or go into our channels. On Monday, we were talking about a rally this week, but we were talking about this week, not a complete reversal of the move to the upside. So should you be looking to buy those kinds of companies? Let's say you start. You still need to know, if you do not get validation and the selling gets heavier, which a lot of people are expecting right now, that you need to have a plan to say, my timing was off. I'm pulling the plug until I see more confirmation. So there's two different sides to this equation. Do you think it's bottomed out? And do you think it's smart to start building those positions? Now, you're going to play mind games with yourself, but they're good companies, Yeah, Apple's a good company. It's down almost 20, 25% from the highs. At what point are you starting to now say, I like this company here? You need risk management on top of profit potential. I want to tell you this, and I want to tell you this in a big way. Professional traders first manage risk while assessing profit potential. If you don't believe me, let's take a look at this chart, because this is something that just happened very recently, where a hedge fund manager bought the stock and then got clobbered and got out of it right away. So if one of the most popular hedge fund managers, Bill Ackman I'm talking about, does that, why wouldn't we do the same thing? If he pulled the plug on an idea that he loved because he was buying it on the way down, you need to game plan the same exact thing. Get your ego out of the equation, all right? So, of course, we're talking about Netflix, right? There's no other way to put it. We're talking about Netflix. We're talking about, actually, can you see it here easier on the daily charts? We're talking about this move down here. He was not expecting this to happen. He thought it was bottoming out over here. As a matter of fact, he started to build his position over here after earnings, held it this entire time. So if you remember, this is where he started to add to that position. Kathy Wood got out on this move down. He started to build the position over here, waited for the next earnings, and big move to the downside. So what did he do? He acted professionally and said, okay, where I thought it was bottoming out, it didn't, I'm gone. Now, this is a big part of trading as well. We got a lot of people coming in asking us, what am I supposed to do with these positions that I'm deep in the hole on? Again, not financial advice. This is for education. I'm telling you how I would handle it. When earlier in my career, when I was a little trading newbie, and if I held losses too long, which I don't do anymore because there's no reason to, you get out and you go back and you try and make it back already. When you do that, you have to get back into the right mental state. You have to say to yourself, I can't go to bed every night thinking about these losing trades. I have to do something about it. The way that I handle it myself personally is I scale back. Now, the reason you're not getting out right now is fear of missing out. You feel that as soon as you get out, it's going to start to reverse, and oh, I was right. I shouldn't have got out. But again, I'm going to keep using this stock as the poster child for this. There was a lot of people over here who rode this move to the upside, did not recognize the change in tape, and now they're sitting in this stock $160 lower than where it was up here. Okay, you need to make a decision. So the way I handle these trades back in the day, I'm very disciplined right now, scale back and then get that buying power back and then try and make that money back in a better, different idea. I know there's a lot of people watching this right now that are stuck in some longer term positions. You really need to make a decision. You need to say, am I willing to take this pain, or do I want to reduce my exposure, either make it back in a different trade, or then look to put those shares back on if and when the stock does bottom out. The bear market is pretty strong right now. I know we're rallying this morning, which kind of takes us back to the original question of today. Bear market reversal or bullish momentum? Right now, I'm trading bullish momentum. So that means that I'm looking to trade these short-term bullish moves to the upside for cash flow, but the bearish setups, I'm looking to hold those a little bit longer. So I just want to say that one more time because it's very critical for the current market conditions. Any rallies in these bearish stocks, I'm looking to exit the first time it slows down if I see opportunities. AMD has been one of the most common stocks that we've been aggressively trading on the long side for short-term pops. Stocks that are in bearish order flow to the downside that are setting up for the other side of the market, those stocks I'm looking to hold a little bit longer because that bigger picture is on my side. So right now we're looking at bullish momentum for cash flow trades versus bearish order flow for longer term swing trades. So I want you to screenshot this. We do this every Friday. I want to give you the list of longs and shorts that I'm looking at coming into the day. Maybe you could take a look and maybe reverse engineer. It's up to you. I'd love to see you in the boot camp because I do this for you every day. But if we take a look over here, you can see these are the ideas coming into today. So I have some bullish setups, some bullish reversals. You can see most of those are in the energy stocks right now. A couple of stocks that have pulled back that I'm looking to reverse back to the upside. But you can see the bearish side of the market is a little bit more heavy. So these stocks that are already bullish, I can hold these a little bit longer. These stocks that are reversing bullish would be momentum trades. And these stocks that are already bearish would be heavier trades to the downside. Does everybody understand what I just gave? I just gave you the complete breakdown before the market opens of how I plan to trade these stocks 90 minutes before the market opens. That's the kind of game planning that will level you up and take you to the next level. And when I say level you up, I mean you are prepared to make decisions before you need to make that decision. If you're not doing that yet, that's fine. You're watching this now. You're trying to educate yourself and become a little bit smarter and put yourself in a position to win every day. That's why you're watching these videos. That's why you're on YouTube searching for some new ideas. I want to walk you through now yesterday's. Actually, first, I want to give you a bigger list. I just gave you one list. Take a screenshot of this one right here. Now, we're going to go over into our list of stocks. So this list here are stocks that meet the perfect criteria. So you can see this is a different list of stocks. Now, interesting here, BMBL is a stock coming off the mat. And again, this is a very similar criteria where look at the volume after earnings. Look at the volume after earnings, but having a pretty hard time at 30. So BMBL, I'm looking, it has to be over 30 for me to start taking a look at a new idea. Then we work our way over to stocks in play. And you can see that we break the order flow down in a couple of different ways. And that order flow gets broken down into this list. Okay. So you might want to watch this video again one more time. I just gave you a bunch of ideas. Click on the video again, watch the replay. There's a ton of stuff going on right now, but I just can't stress this enough. Okay. The market conditions are still long-term bearish. None of that condition has changed. If the market closes negative again, this will be 8 weeks in a row to the downside, 7 or 8 weeks in a row to the downside. We are not seeing a bigger picture reversal yet. Today's pre-market activity, and specifically in electric vehicle stocks that are rallying this morning, are momentum moves higher short-term against that big picture to the downside. So I will be looking to be a day trader today in NEO, XPEV, LI, Lucid, as long as they meet bullish criteria after the market opens. If they do not maintain that bullish order flow after the market opens, that means that bigger picture to the downside is starting to reassert itself, and then we look for a short sale. So the reason I kind of went through all of that is because one of the common questions we get are, which time frames am I supposed to watch? That becomes pretty clear once you understand how to read order flow and understand how to read the tape. But then actually using the time frame that matters to you is where you gain confidence. So in other words, if I'm only swing trading, I'm not looking at the 5-minute chart. If I'm day trading, I might look at the higher time frames, but then I go to the shorter time frames to validate, is right now doing what I want to see because of how the big picture looks. So if it's still going down, you're not a buyer, even if you loved it before the market opened. Okay. Now I want to give you, you can screenshot this. What I'm going to show you is last night's coaching calls. Hopefully these will help you think about some new ideas. So again, the big thing I want to point out here, and I'm just going to go back up to the top. Last night's call was 2 hours and 25 minutes. 2 hours and 25 minutes, just on one coaching call last night. And we get into, as long as you have questions that are valid, obstacles, roadblocks, challenges, goals that you want to accomplish, I give you customized help. All I need you to do is ask a question. Ask as many as you want. I know Al's on the call right now. Al had like 7 questions last night, which was perfect. If you want to attend these calls, click the link in the description and at least learn about what our 14-day boot camp is. So I'm going to walk you over through now. Take a screenshot of this. Maybe you might have to watch this one more time. So we're going to go over here and, all right. What are the best times to day trade? We actually debunk a big myth on day trading last night. Why you do not determine the direction of the market in the first 5 minutes. I want to cover that for 1 second. For some reason, a lot of people believe as soon as the market opens, then you pick a direction. So ding, 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 the market opens. I'm going to day trade now. Give me that secret. How do I know right after the market opens what direction I should be trading? You don't determine that when the market opens. You should know before the market opens what the market bias is. Do I want to be a buyer or a short seller today before the market opens? After the market opens, again, I'm going to exaggerate this. John Bates is here. He knows we're just having coffee and looking for entries. You are not figuring things out after the market opens. After the market opens, you should have already done all of your game planning, all of your research, all of your sector rotation. You should know which stocks you plan to trade long before the market opens. When the market opens, you are not trying to determine what you should do. You should just be looking for entries. That will reduce your trading stress by 90% because you're not guessing anymore. You're just looking for entries because you already did the work. So I'm going to scroll through. I keep getting off topic here because now I'm in coaching mode. All right. All right. So you can see here, we actually a bunch of stuff. This is a big one here. How to instantly develop discipline, avoid fear of missing out, and hold good trades longer. Do you think the answer to that question could help you right now? How to properly use candlestick patterns using VWAP, volume weighted average price, and the settings. Do we use deviation bands? So I'm just going to scroll through all of this. You can actually, you could snapshot that. I'm going to go down to the bottom one here, working it again, working the charts. These are actually Al's questions in here. We get into TradingView software. We get into reading price action for what we call our snapback reversal setup, how to build a list of sector stocks, and how often to update them. That's a big question. If you don't know, obviously, part of what we do is sector rotation, and then we dive into the individual stocks in the sector rotation. Good question last night from Martin out in France about how often should we update them. For swing trades, how to know if long or shorts are the best play. Obviously, big question right there, and how to trade them properly. Determining relative strength and relative weakness. This was a good question from John last night. Why do most traders plateau or even go backwards? What's the one metric that matters? We'll get to that in 1 second. Different types of order types and fast-moving stocks and that kind of stuff. So you can watch the video again, but I want to end with this. What's the one metric that matters? The one metric that matters, and I'm saying this in a joking way, but a passionate way, but it drives me bananas. So many people reach out to us and ask us, what's your win-loss percentage? Pete, what's your win-loss percentage? What's your win-loss percentage of people in your community? I don't give a crap. I honestly don't. The only metric that matters is, did my account go up? You could have a 100% win-loss percentage and still not have your account go up in a way that is meaningful if you booked good trades too quick. The only metric that matters is, did your account go up from 1 month to the next? It's not the win-loss percentage. It's, did you earn more on good winning trades? And today we talked about order flow. Today we talked about tape reading. It's stacking that argument to say, wow, everything that I need to see that looks perfect is happening right now. Get your hands off the keyboard. Do not hit that sell button, because everything you're looking at is perfect. As long as it's still perfect, you continue to move up your trailing stop. As soon as perfect is not perfect anymore, then you get a little bit more aggressive in your decision making and maybe scale out or get out. That's what separates somebody from saying trading doesn't work from somebody who says, you know what? I got this. I know exactly what I'm doing. I'm going to leave you with that today. Make sure you watch this video again, scroll through all those questions, and use them to level up a little bit over the weekend. Thank you so much for watching me. Have an awesome day. Futures are up a little bit now. Let's see if we get follow through. Thank you so much, everybody. If you got some value out of this, do me a favor, smash subscribe, and then watch the next video that's going to show on the screen probably right now. Have a great day, everyone.